Today we'll be taking a look at another ASX lithium stock. This time it is Essential Metals. The ticker on the ASX is ESS. We'll be providing a fundamental overview today of the company, as well as providing some technical analysis in order to make some predictions on where we can expect to see Essential Metals go in the near future. Let's take a look. I've partnered with Crypto.com to provide my viewers with an awesome opportunity to accelerate their crypto journey. Crypto.com is used by over 50 million users in 90 countries across the globe and is a leading platform for buying, selling and staking crypto. They also offer metal Visa cards with a huge range of rewards that allow you to convert and withdraw your crypto in fiat currency. Crypto.com is offering a $25 sign up reward using my affiliate link in the description or by entering affiliate code RyanProven. How's it going, guys, and welcome back to another ASX stock analysis video. As I mentioned, today we are taking a look at Essential Metals. The ticker on the ASX is ESS, and this is another lithium exploration company soon to hopefully turn into a producer in the coming years. Now, what makes this company stand out is right now there are 13 resources across Australia that are lithium based, which do have JORC resources. But the difference that ESS has is that it is the only one currently on the market that does not have an offtake partner. And for those of you who are familiar with mining or the lithium market in particular, what you'll understand is when offtake agreements start getting signed with these types of companies, we tend to see the price of them increase because they obviously have buyers and binding offtake agreements for their product, which helps them then justify the move into production. Now, certainly I hope this is something for the ESS holders that we do see in the near future, as the company, in my opinion, has a lot of promise. But now let's jump into an overview of the company and take a bit of a deeper look. So to kick things off, ESS is currently sitting at a value of 46 cents per share, which equates to a market cap of roughly $115 million. As of their last quarterly, so the September quarterly, they closed with cash on hand of $8.1 million, and they also have 15-cent options which are expiring at the 30th of November 2022, which will be an additional $3 million if all of those are exercised. Essential Metals' flagship project is known as the Pioneer Dome Lithium Project. It's based in Western Australia, just near Norseman, so very close to main roads and infrastructure. And currently it has a resource of 11.2 million tonnes at 1.21% lithium oxide. So as you can imagine, that is a decent resource at a very decent grade. Now, towards the end of November, what they're looking to do is increase that mineral resource, and they have been doing additional resource drilling in order to facilitate this, along with additional metallurgical test work which has been completed at various other deposits within their Pioneer Dome Lithium Project. Furthermore, they have also submitted a mining lease application. The grant process at this stage is going to take approximately 6 months, they've suggested, and this would be a big milestone for the company moving forward. Now, of course, they've also started their scoping study, and it is based on right now that 11.2 million tonne resource, but I do imagine as well the mineral resource upgrade that we're going to see is going to be factored into that as well. I think, in my opinion, that this will be the catalyst to start seeing some offtake agreements get in place. Right now they're targeting January 2023 for the release of this scoping study. An interesting comparison to make with Essential Metals is against their competitors. So if we look at companies such as Global Lithium Resources, their ticker is GL1, another great company, but they have two resources, about 10.5 million tonnes and 9.9 million tonnes, so basically double the size, but the grade is lower, yet their valuation is 4 times higher. Now, if you were going to say it was 2 times higher, then fair enough, that would be equitable. But to me, this screams that Essential Metals right now is currently undervalued and it is worth at least double what the current share price for this company is. Furthermore, you also need to take into account their other projects. They have potential at their Golden Ridge and Jugular Dome projects. These are gold projects that are just near Kalgoorlie. They also have free carried exposure to a significant portfolio of nickel and gold exploration projects as well. So this is just an additional feather in the hat for ESS when it comes to valuing the company in the future. One of the most compelling points of the Dome project, in my opinion, is the fact that they have a very high grade material with a low strip ratio. I'll just give you an example from one of their assay results from their Cade deposit. They have achieved in one of their holes 19.2 meters at 1.44% lithium oxide, and that was only from 15 meters underground. And you'll see that many of their results reflect relatively similar results at both the Cade deposit and Davy deposits as well, which indicates to me that the strip ratio would be very low, meaning they're able to more easily convert their mining operations into revenue and then of course profits, as the costs to get to that pay grade material are very low getting through the waste. This is certainly a resource which is from basically the surface, and it is all the way through from what they can tell. It is a decent thing to take into account. From a timeline perspective, we can expect to continue to see drill results come out, but just to highlight from some of their most recent drills released on the 27th of October 2022, they have achieved 3 meters at 1.22% lithium oxide, and that was from 134 meters. Now these are basically 2 sub-parallel spodumene bearing pegamites, and that basically means what we're seeing is this grade of lithium does extend downwards. We are seeing it of course at surface, but the resource will continue to extend downwards. Now when we're looking at results like this, what we can expect to see is a massive upgrade when it comes to their overall mineral resource, and of course when that feeds into the scoping study, that will certainly convert into material, I suppose, from a share price perspective. We should start to see, of course, those results, as I mentioned, come out. The scoping study underway, coming out in January 2023. And hopefully we do see what all the investors are expecting, which is a very viable and very profitable project. That concludes the first half of today's video on the fundamental overview of ESS. So now let's take a look at the chart, perform some technical analysis, and try and predict where we can expect to see the price of ESS go in the near future. Let's take a look. Welcome into the Essential Metals chart, guys. As you can see, as of close of business, and that is on the 3rd of November, we're currently sitting at a value of 46.5 cents. Now, right off the bat, what strikes me is, of course, the all-time high up here, which is sitting at 73.5 cents, and we've come down quite significantly, but as you can see, these were after absolutely ginormous runs, and it looks like things are starting to now ease out and stabilize a bit. If I zoom in quickly, what you'll notice is we do have what appears to be a bit of a gap that has formed itself over here. Gaps typically need to be closed, so on that basis you would expect the price to move up to the low of the day on the 26th of October, which is 54 cents. So immediately that is likely to be our very first price target. Now, zooming out a bit more, I just want to put in place what I think the current pattern is. I'm starting it from here, which was our most recent low. That was the 23rd of June, and I'm going to move that up, and you can see a nice trend has come into fruition here. Conversely though, we have a trend at the top end being our resistance point that has formed basically what appears now to be a bit of a wedge pattern. There was an attempted breakout of this wedge pattern, as you can see over here on the 24th of October. This unfortunately failed, hitting a high of 61 cents, and then we had the drop all the way back down to the bottom end there. You can see the volume really spiked, but things do once again appear to be stabilizing. You can also see that the 20, 50 and 200-day moving averages are very close together. Right now that 200 is acting as a bit of support, along with of course our bottom line now. The key point to get past immediately is that 50-day moving average, sitting right now at 58.4 cents. You can see a test of that occurred yesterday, the 2nd of November, and I'm expecting a few more tests or breakthroughs to actually occur moving forward. But overall, the trend is intact, this nice upwards trending motion, but things are getting a bit tighter. Hopefully though, because we are overall moving in an upwards direction, when we do break out, we will break upwards. Now of course as well, you can see that we probably have a key point of resistance just above this trend, which would be the breakout target at 61 cents. You can see horizontally there has been plenty of price action here and attempts to break out, and of course is acted as resistance and support historically. So that would be an immediate breakout target if we break through the top end of this trend. Let's take a look at a few more indicators. So first and foremost, I'm going to plug in the relative strength index, the RSI. You can see that obviously it spiked when we broke out, but it still didn't go into that overbought range. It peaked at 66.31. Right now sitting at a value of 44.19. So we have plenty of room to start moving in an upwards direction, as we seem to be right now at the bottom end of our trend and key support point. Now looking at another indicator being the MACD, what you'll notice is we did have a cross of the 12-day EMA below the 26-day EMA when we started to move downwards. That appears to be shallowing out now. As you can see, we've had our first lighter pink candle here. And as a result of that, we should hopefully start to see that 12-day EMA swoop up in this sort of a manner and cross back above that 26-day EMA. In my opinion, moving towards the pointy end of this trend, that will be a major catalyst for a breakout of it. It's good to see that we are hollowing out now and the support point has managed to hold up, and it bodes very well for the future. Now of course, what are we aiming for? Well, first and foremost, of course, we want to try and get past the 50-day moving average. You can see that is likely our key short-term point of resistance at this point in time. We don't want to see that 20-day moving average come and creep back below that 50-day moving average, although given the way the trend's moving, I can't see that really happening, although it is a possibility to consider. Now, of course, it's quite clear then, as a result, the top end is our key target. A breakthrough of this is ideal so we can try and test that 61 cent range again. If we get to the very pointy end of this chart, you can see we're sort of hovering around the 53.5 cent mark. Right now, if we shot directly upwards, it would be 54.5 cents. But we are looking to see something like that occur within the coming weeks. Now, worst case scenario, if things absolutely just started to go downhill, where would we be looking at? Well, let's have a look at our horizontal points of support outside of the current trend. So I'd suggest the first point is likely going to be around this sort of mark, the 40.5 cent mark. You can see as I start to extend this line across, it has been a tested point and a breakout point and a breakdown point on many different occasions. So I'd suggest that would be our worst case scenario if this trend does manage to fail. But all in all, things are looking positive. There's plenty of news coming up for this company, so I expect something like that will manage to kick us off, help close this gap, and then of course shoot through up to that 61 cent target. That wraps up today's analysis of essential metals ticker ESS on the ASX, guys. I'd love to hear your thoughts down in the comments section below. Of course, if you did enjoy today's video, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.